And welcome back to the Degen Den, episode 6. I'm joined by my good mate, co-host Hayden Kerr. How you going, mate?
Feeling good. We went and got some haircuts this morning. Looking good for our audio-only podcast.
Mate, it's a face only a mother could love.
Thanks,
and a haircut for radio. So we don't have any visuals. Here we are. But, you got to get prepared for these things.
Mm.
So it's good to be here, mate, because I've been overseas for a little while.
Yeah.
I've been away for about a month. So.
In Bitcoin land, El Salvador.
And
that was for the surfing championships
to
Australia. How did that go?
We took home second place, silver medal for Team Oz.
Nice.
So we were pretty stoked with that.
Yeah.
Everyone seemed pretty stoked about old Captain President Bitcoin.
Yeah.
Didn't get to use any Bitcoin for purchases.
Did you have a chat with the locals about it at all?
Yeah, it doesn't seem like it's that integrated. But what you got to remember is that it's very much a emerging world. It's a third world country. Yeah. And quite a lot of poverty, not running water that you could drink and whatnot. So the use of finances, whether it's Bitcoin or local currency, doesn't seem to be at the forefront of their priorities.
Right.
And still in a state of emergency with the military running the show. So, yeah, there's a lot of other social factors going on. But chatting to some of the locals that I did, everyone was quite seemingly pleased with, I forget the president's name.
Nayib Bukele.
Bukele, yeah. They thought he's doing some pretty cool things for the country. That's just, one side of things that I heard.
Yeah.
No one really spoke much about Bitcoin at all.
Right, interesting. I think they've got a long-term vision with what they're doing. They've got some interesting Bitcoin bonds that they're doing with the country that a lot of people are interested in buying into.
Yeah.
And they're also doing some really interesting stuff where they're harnessing the power of their volcanoes to actually fuel Bitcoin mining.
Yeah.
Through using renewable energy of the volcanoes. They're using that to mine Bitcoin and actually increase their Bitcoin holdings. So that they're going right in.
Yeah.
Yeah.
And good luck to them. It's a beautiful place.
Although today they might be a bit upset with the current Bitcoin price.
Well, yes. Markets have been tumbling. There's blood in the water. Dossie, mate, what is going on? Please give us an update. Why are my bags emptying?
They're gone. Don't look. If you haven't looked already, don't look. It's bad.
Ugh.
Currently sitting. So Tom, why do we look at Bitcoin to tell us what the rest of the market is doing?
Well, we do that because it seems to be the market indicator that seems to be the dominant currency asset, I should say, the dominant asset in that asset class.
Yep.
And everything tends to follow Bitcoin's lead. It's the oldest, it's the most stable, it's got the largest market cap. It tends to be the market mover.
Yeah, well said. Exactly right. So you don't need to necessarily look at all these different coins to find out what your favorite crypto's price is doing. You can just look at Bitcoin, especially in times like this, to decide where's the market going. Because whatever your crypto's doing internally, if they've got new updates or if they're doing all this stuff, in these macro conditions, it doesn't matter. You just look at Bitcoin to decide to get an understanding of where the market is going.
Especially in a bear market as well. Everything going on, maybe in a bull market where everything's absolutely fantastic and you've got different things hitting at different times.
It's a different environment.
But right now with a whole lot of liquidity exiting the market, you're probably going to be looking at Bitcoin for the indicator. There's obviously going to be internal smaller mechanisms at play for the different altcoins and whatnot, but for the most part, the entire asset class is going to be heavily dictated by the movement of Bitcoin.
I think it speaks to the need to be adaptable as a crypto investor because your strategy, you can't. We spoke about this on previous pods. Like you can have a long-term 5-year set and forget it plan of dollar cost averaging. But if you want to, if you're trying to make some money in the markets, it can pay to be really attentive to what's going on, and you might need to adjust your strategies like on a weekly basis, depending on what's going on in the current market, depending on how deep you want to get into it. But
yeah,
that's the game if you want to play it.
Well, that's it. Just like any game, it depends how in depth you want to go, and those individuals that are making money in whatever stocks and trades, the more in depth you go, probably the better chance you have. Not to say that you're always going to do well, but I think with any investing, set and forget is going to be a bit of a shotgun approach, and you might get lucky, but it's
it depends on what you're prioritizing for.
Yeah.
But what's kind of scary at the moment is that there's no safe place for your money. Like maybe in bonds, that's the first time that bonds have been looked at as a financial investment in a while. But for the most part, like your money is best served in cash at the moment.
Which is wild, even with 8% inflation.
Crazy. So that's where we're at. We got down to 20,800 under that USD for Bitcoin, and for ETH we got to 1155, which is funny because that's the name of one of their tokens, the 1155 ERCs, and that's where we got to in price action.
No way.
Yeah.
All right.
Coincidence. So that was their lows, right? That they're not doing too well at the moment. Neither's the rest of the market.
Yeah, and look, it's interesting because last time we spoke, maybe a month ago, we were saying, yes, it's going to be a prolonged bear, and yes, there's going to be some hurt, but it's probably a couple of months away. It's probably, August sort of thing, end of summer in the US. Are you somewhat surprised, Dos, that we've seen this pain so quickly?
I am. It was pretty brutal. Bitcoin dropped 15% in one day, and it was already down quite a fair bit at this point. The scary thing is there's still a lot of macro negative to come. Like the macro isn't changed. That macro is getting worse at this point in time.
Yes.
We know, we've got a good feeling it's going to change around eventually, but that eventually, with the recent inflation numbers being the highest since 1981 was the highest inflation increase just printed the other day.
So what are those current macro factors that are really seeing this negative price action across all markets, but especially the tech stock?
Well, we went super into depth in it in a previous video, so check that out if you're interested in our in-depth thoughts. But, some of the things are the war at the moment. The war with Ukraine still going. Ukraine and Russia, yeah. The interest rate rises that are happening across the globe, like inflation's going up and interest rates are going up. Looking like we're going to be moving into a recession, most likely. It's, pain.
Supply chain issues.
Yeah.
Sure.
Exactly.
Yeah, not that great around, but there's also some, within the market factors that have contributed to this current crash. So for your mind, Dos, what do you feel has led to this, what did you say, 15% decrease in a day?
Yeah, I think that was the numbers.
Highest, second
in Bitcoin's
highest.
history, yeah.
Yeah, so why now?
So what's happened is that where the market itself, Bitcoin, but also the entire crypto market, is deleveraging. So the money in crypto, it's not actually all there, right? A lot of the money, the entire money that's into crypto, a large portion of that is leveraged money.
Right.
Meaning it's money that people are borrowing and putting into the market with these leverage products.
Right. They don't actually have the money to buy the asset. They've leveraged and somewhat over leveraged.
And the way that the crypto markets work, it's I guess true capitalism in a sense, not completely, but it's an open market. And with the DeFi, decentralized finance world, with things being on chain and being decentralized, people can build these protocols, and countries can choose to regulate against them or around them, But ultimately, these protocols still exist and can be accessed and operated through decentralized means.
Yes.
So the one thing that humans love is leverage. We've spoken about this before about, we're always trying to borrow from the future to pay today.
Yes.
So that's where we're at, and crypto makes that possible, and that leads to the volatility. That's why we get $60,000 Bitcoin down to $20,000 Bitcoin.
Well, yeah, and we're like neurologically not very well designed for delayed gratification.
Of course.
We're designed for instant gratification because we don't know if we're going to get the food or the safety, the shelter in the future. We need to get it now and assure our survival right now.
Yeah.
So it doesn't come naturally to us to think about the future as much. And I think some of that, behavioral psychology definitely plays out.
It's your background.
Yeah, definitely plays out in the stock market, because what we've got to remember is that we're all trying to see this lens of logic and rationality, and it's supposed to be rational. It's numbers. It's this. But unfortunately, we're irrational beings by very nature.
Definitely.
The limbic system will always trump the frontal cortex. And
What's
what I
the
mean,
limbic system?
The limbic system, or mammals have a limbic system.
It's interesting stuff.
The limbic system is your emotional center. Mm-hmm. It's a largish area in the midbrain, but essentially it houses your emotions.
Right.
So that emotional areas will always trump your rational areas, which is the more front of the brain there in the frontal cortex. You can be as logical as you want, but emotions will take sway over that, and so that's seen very evidently when it comes to relationships. And
so in relation to crypto, there's a skill in being able to recognize when your emotions are taking over and trying to connect back to the logical part of your brain to make better decisions.
The best traders don't trade emotionally.
Yeah.
And it's very difficult because what we've also got wired in there is a strong sense of belonging. That's where you see the layer one wars. That's where you see people warring because they know it's Solana.
People get married to their coins.
Yeah, it's because, for
Cardano,
some reason,
especially.
Cardano, oh my God, go eat some
ham. I love Cardano.
Get him some ham. But that's exactly it. You see this play out in immense intensity in crypto Twitter.
Yeah.
Because people are so damn emotional and defensive because they simply can't separate themselves, their ideologies, and actually what's going on. So if someone's attacking a coin, it's attacking themselves rather than just an ideological view.
I think that's also magnified with people having financial interests into the coin.
Oh, of course.
Yeah.
Of course, because what you're saying or what you're being asked to say is that you're wrong.
Yeah.
Don't like that one.
Yeah.
Don't like that one. So we're emotionally invested in, say, we've bought into Solana and, we like the ecosystem. We like what it does, and because that's a representation of who we are and what we're about. And
you fly the Solana flag.
Yeah, I like Solana because it represents X, Y, Z. It's my values. It's my ideologies.
You use it. You get familiar with it.
And then someone's telling you, no, this thing's going to go down the drain and it's terrible.
Meanwhile, we got Solana outages for 12-hour plus.
And so, of course, we're going to respond emotionally because what the brain is initially interpreting is that I've made a mistake and the ideological view that I align to is wrong somehow, or it's flawed. And the most importantly is the community that I've attached my value systems to is flawed in some way.
Community is a big part of crypto.
Community is a huge part of the human psyche, the human brain, where everything is connected to community. Why would you, follow a sporting team so vividly? It's like...
But what I'm saying is that is a specific area of crypto where the people who have the most financial interests in a coin doing well, part of that strategy when they're going, okay, what's our strategy to, whether they've got good intentions with the coin or not, whether it's a, like a meme coin like Shiba, which they did this very well with building community versus like an actual, utility coin like a Solana. Like the idea is part of that strategy would be to build community to increase their token price.
Oh, rightfully so. So I think if we can look at it from an investment lens, is going on the one hand, you have to really be able to check and get distance from your own emotionality to the rational side of things. You know, everyone's going, there's blood in the water, you should sell. Everything's going.
Yeah, how are people feeling about the crypto markets right now? If you had to take a temperature check.
Oh, it's max fear, obviously. They're going, because imagine, just put yourself in the shoes of someone that, you've just gone through, Christmas and everyone's going nuts about crypto and everyone's talking about 100K Bitcoin.
Yeah.
Things are popping up everywhere. Mainstream news is going, you go, you know what? It's looking like it's a thing. We jump in and you jump in at the top.
Yeah.
You buy a 60K Bitcoin.
I know a lot of people that jumped in at the top.
60K Bitcoin, it's going 100K, you jumped in the top, and then you look at it now and your 60K Bitcoin is sitting at 20K.
Yeah. I see if you bought Bitcoin too. Like if you're buying altcoins, it's a lot
worse.
Yeah.
We talk about Illuvium, but there's a lot of people that jumped in at like $1,600 Illuvium.
Yeah.
It's sitting at under $200.
Yeah.
Whew, that's a tough one, or, I did buy some of those Degen coin things, the micro caps, D-Race and stuff that's sitting at 30 cents, was at $9 once.
Yes.
Wow. Or Luna and stuff like that. So
a lot of these things won't go back to their own.
Yeah, the micro caps, they're shot.
Some will though, and some will do well, but it'll be about because anything succeeds in a bull market. But when the liquidity is pulled out, it's about how well did that project manage that risk? How well did they manage their funds, and how well are they building?
Exactly.
So many of these projects will go to zero.
Yeah.
But a few of them will bounce back and will do extremely well. And Illuvium is obviously one of our picks to do that.
Exactly. And so if we look at that average person, I think that gives a good indication of what's happening in the markets on a macro level. Is you've got a huge amount of pain because you had all these people jump in when there was max euphoria and their assets have gone down 80, 90%. So there's all this fear and pain.
People are scared. They don't want to jump in.
And then the macro environment's going, well, inflation's at this price and, this and this, and people are over-leveraged, as we said.
Yeah.
No wonder there is a huge amount of liquidity exiting the market because people are shit scared. You said, where do you put your money? Right? So it makes sense. People are going, well, that's not safe. I've got all these losses. It's probably going to go down more. I'm just going to sell.
Yeah.
And I totally get it. Obviously, it's not the smartest thing to do, but I totally understand it from a behavioral psychological thing. It's going, well, at some point I've got to stop the bleeding.
Especially if, like we said, with inflation rising and with interest rates rising, like people are feeling the pain and they need to actually access some of that liquidity that they hadn't earmarked that they even were going to take that out. Yeah,
so you got both. You've got actually liquidity calls being taken in, going, well, you're getting margin called because everyone's over leveraged.
Yep.
A lot of people are over leveraged. So you've got literally they have to sell. They're being forced to sell, and then you got other people going, holy fuck! Like I put like 50K into Bitcoin and it's gone to shit. Like it could go even worse. I might as well take it now. I don't trust the markets. I don't trust crypto. And actually because of inflation and my relative job, my wage, I actually need some of that money. So, and it's a good thing to look at it going, now is the time to do the opposite.
Yeah.
This is when we do not want to sell. It's like, obviously some people need to live and that sort of stuff. And we always said from the start, only ever invest what you can afford to lose.
We did.
Only ever do that. And unfortunately, you got so many people that are over leveraged, or they've invested way more than they can afford to do it, and circumstances change. So you've got to have that buffer. But yeah, that's the average sentiment of the macro environment of the average crypto investor is just going, this could all go to shit and it's whatever. And it's good to be aware of that, of what's happening. So on one hand, you've got to be able to check your emotions and go, well, what's the difference between how I see that asset right now compared to how I saw it in January?
Right.
What's changed? So that's the first thing to go, well, why was I so bullish on that asset in January? What's changed now? okay, that's a good bit of perspective.
Yeah.
And so that's where we need to check our emotions. And on the other side of things, when we're looking to do some investment in the future, going, well, actually, where do we see that connection to community and that sort of real
we get to see builders build.
Yeah, but where do we see that emotional connection with other things? Because clearly that's what drives markets. In every single market, it's not that logical. There's always a layer of emotionality.
Of course.
Because we're emotional beings.
Yeah.
So it works on both sides. It's good to check it for ourselves, and then externally when we're looking to enter markets, going, how is the average person going to respond to this niche, to this narrative, and whatever.
Yeah, agreed. So that's where we're at. We've had some pain. These are the reasons why. I think this is happening today for America, tonight for us, I think, is when the Federal Reserve will announce a new rate rise. The market has priced in 0.5% interest rate rise, and I think they've priced in the next 3 months or something as 0.5%. Now, interestingly, these are events that move markets. These events, these announcements. There's not a whole lot of events in crypto that will actually be really correlated to strong market movement in crypto, like that you can reliably trust, like an interest rate rise or dump. And it's about it's not about what it is, what it turns out to be, the rate rise. It's about what it is in relation to what was expected. So part of the reason for this big crash was that there was an expectation number for inflation, which was, I think, somewhere in the 7%, high 7%, and it came in higher than expected, which is the reason why Bitcoin just fell straight through the floor.
Well, all stocks did.
Exactly. But something particular with crypto, speaking about the over-leveraging, just to touch on Celsius for a second and what's happening there. So Celsius is like a DeFi lending platform where you put your crypto in there.
Yeah, they're like a crypto bank.
Exactly. That's the way that they operate, but that's the way they've been marketed to operate. Yeah. But speaking about, the over leveraging of the crypto market, you would be able to get, I think it was like 5% on your Bitcoin and maybe a little bit more in Ethereum. And and what they would do was they would then use that money and they would go degen into other stuff sometimes. But, they would do their investments and make more than what they were going to give you. They would take part of the profits, which is part of the deal, and that's great. It worked
like
for a
hedge
while.
Fund sort of thing.
Exactly. So that works in a bull market, but in a bear market, especially after Terra Luna crashed and kind of drew a light to the over leveraging of crypto. Like, we all knew it was bad. It actually started with, do you remember Wonderland time?
No.
So this was a DeFi token that happened, I think, earlier this year or end of last year. That was super popular, where you could get in and you could make some crazy amounts of yield. I remember people asking me about it, and they're like, "Oh, is this for real?" And I was like, I did a little bit of digging, and I'm like, I don't know. If it sounds too good to be true, you should be skeptical regardless. And it worked for a little while. People got crazy yield, but then it was found out that one of the main guys had previously been connected to a rug pull. So that led to massive panic, fear, sell, crash.
Right.
Boom. That was a while ago, leading into the Terra situation, which you're probably aware about, where there's the Terra went from over $100 to zero, literally zero.
I know. I checked it. There's nothing
You're aware.
Yeah.
Yeah. He might go to jail, Do Kwon. Depending on how the courts see it, but they're looking for him. And he started Terra 2.0 as well. But that led to this Celsius. It's connected because some of how they were staking Celsius to earn that money, they were getting 15%, I think 20% on their stable coins with Terra Luna, and then they were giving their users 5%, and they were keeping the middle. They were like the middlemen, and now they paused all withdrawals, so you can't access your money at Celsius right now.
Wow.
So people are freaking out, which is adding to this massive big push down of the Bitcoin price, which is why we just didn't put up any resistance at all, because of all the negative news. And like, that's big. That's billions of dollars. I think it's 10 billion, something like that.
Yeah, that's what I heard.
So anyway, that's why we got so low. And we're just about to come up to that massive announcement of what the Fed's going to do. But it won't be about what they do this meeting. It'll be about the talk that they have after the meeting. And that's where their comments, we start thinking about the future. Like, okay, and the market starts to price in what's going to happen past September this year. Now, last interest rate announcement, last month, I think, they came out and afterwards they said, we're not going to use a 0.75% interest rate hike, which actually correlated to a bit of a bounce for Bitcoin. Like, it got back up to $32,000, I think.
Yeah,
which is
a little bit positive.
Now, markets are starting to price in a 0.75% increase. So, this is, I've got no idea if this is going to come off or not, but this is where I might be looking to call a bottom. If we were going to call a bottom, I know.
Heard it here first, ladies and gentlemen. So what do you mean by that comment, that you're looking as in it's getting close to it, or what are the confirmations that need to happen in your mind to confirm a bottom?
Well, it got down to just above 20K, and I think we had a bit of a bounce. We're sitting about 22,000 right now. The comments after the Fed meeting are negative, are really hawkish, that are saying, hey, we've got to do some stuff. We're going to put more pain into the market. If they make that very clear to reduce inflation, that's their main priority. That's what we're very confident.
Which is very likely that the whole time they've indicated that their main concern, the boogeyman, is inflation, and rightfully so. That is the scariest. It was
the number one concern for Americans over coronavirus when coronavirus was still like a big thing. So it's
also hugely concerning from a fiscal policy point of view as well. I mean, we've seen what hyperinflation does and high inflation numbers in different countries around the world. You cannot have your currency be absolutely decimated, cut in half in a day and things like that.
Need to get it under control is what they're going to do.
Yeah.
So if they choose to make that clear tomorrow, right, I'm expecting some more pain for the markets. And like we were saying, I think there's still some leverage. There's definitely still some leverage left in the market that can be snuffed out.
Oh, yeah.
Max pain point. You talk about this concept a bit. What's the concept of max pain in a market?
Well, I mean, I guess you're talking a little bit about, that greed and fear index a little bit. But max pain is essentially when everyone is absolutely hurting, everyone's just decimated, everyone's just going, where my portfolio is absolutely bottom and everything's completely negative. That's when it's max pain. I don't think we're quite there yet. Everyone's a bit...
Yeah, still doggy paddling.
Yeah, everyone's got their head on over them, but there's
a lot of people still there.
God, this is a bit shit, but I don't think we've hit max pain yet.
Yeah.
I think there's some hurt more to be done.
So what I'm saying is the triggering, that could lead to a flow-on effect of maybe Bitcoin pushes under $19,000. And then that's going to potentially lead to some more unraveling of liquidations, including just more natural fear in the market where people are actually like, oh, no, crypto's done. It's done. Let's get out. Like, especially if you got tens of thousands still invested.
Well, and here's the problem. Like, we've seen this over history with bank runs. Bank runs are absolutely wild phenomenons, and it all comes down to trust,
Right.
and the degradation of trust.
Yeah.
Right. So, you've got a financial institution, Bank of England or whatever, and they're going, yeah, you can trust us. We're giving you a percentage. We hold on to your money. We're the bank. And then a number of events happen, a big event, and everyone's going, I actually don't trust them to hold our money. We've got to take it out. But the problem, obviously, with a bank is that they're super over leveraged and they actually don't hold all the assets there.
Right.
So if something like that happens where the trust in the market, crypto market, Bitcoin, something like that, falls, and people go, I really did trust this asset beforehand, but Celsius isn't allowing me to take my money out, and so holy shit, that could happen to all these other centralized things. And then what's to say that this asset isn't going to crash even more?
Yeah, I just got wrecked by Luna, and now I can't take my Celsius.
Yeah, I don't. Why wouldn't it happen to Luna? Luna was like the stable thing, and that went to zero. Why wouldn't all these other things go to zero? And if you get a bit of a run on the bank, that could be quite dangerous, because then it's just huge exiting of liquidity.
Exactly. So when that happens, because like you said, some of it's decision and some of it's forced. So when that happens, it normally leads to a lot lower of a price. But then people who are like still have long-term vision in this asset, like people who are still like, no, Bitcoin is the future of money, and who believe in some of these crypto protocols and go, this price is way too good. Like, this is the thing. They made so much money, the people in the building these protocols, like they were swimming in it, like hundreds of millions of dollars, like unreal. So if they like saved some of that, I'm sure they lost a bit of it, but actually saved, starting to build teams, starting to work on projects, like in a gaming space is where we're looking at. Like they made this so much money in the metaverse run, and the good projects save some and are deploying it. So that's Gala Games, Star Atlas, Illuvium, games like that. So I'm confident in these in the future, like Illuvium under $200 USD. Like
criminal.
Yeah. So if you have belief in these long-term projects, when we hit the bottom, they're going to be probably even cheaper than what they are now.
Yes.
And if you have long-term belief in them, obviously you want to buy at or close to the bottom. You're never going to get the bottom, but if you can get close to it, then that's good. And I think, so what I was saying before is I think this is potentially where we could see a bottom, because we might get crushed and then we might get a good bounce. Finally, a good bounce for Bitcoin might be on the horizon. We haven't had a proper good bounce since last year, like since maybe December or January, something like that. We had an okay little bounce, but we might be looking for a big bounce after more pain. And if I was looking to get into the market, I'd be keeping my eyes on the markets for the next week or two, next little while.
So some of the things that you'd be looking for to look towards that bottom is absolute max pain, where everyone's losing their shit. Everyone's trying to exit, everything like that, which is a tough thing to go. Like, do you want me to buy into an exiting market?
And regulation is coming too. Like they're planning,
which is good.
It can be, but it can be scary.
Scary in the short term, very good in the long term. We need some regulation. We can't have dope-on things happening where it just goes like that. So, but the other way to look at it, and you're going, okay, Dos, why would you tell me to enter into a market where it seems like it's risky and it seems like this would be the worst time to buy, because I could go lower, it could go to zero, there could be the run on the banks, all those different things. And I'm interested in your thoughts on that. My initial take is that going, well, actually, if you take a step back, and Becca talked about this a bit as well, is that the actual riskiest time is to buy when everyone's talking about buying.
Yeah.
Is if you choose to buy, or you look to buy at the top of the market, and you look to buy when everyone else is huge greed and it's top, that's super risky, because it's already pumped.
Yeah.
It's already at the top and everyone's already talking about it. Now, sure, it could keep going, could not be the top. I mean, you never know when you're there. And you go, okay, well, I'm buying in January and everyone's getting in. It's the absolute crypto summer. It's looking fantastic. And Bitcoin's at 60K. It's going to 100K. That's actually the riskiest time.
Yeah.
Because the thing's already overinflated. Sure, it could keep going from that. But if you buy there and it doesn't, like a lot of people did, holy shit, you are holding your sack out, waiting for someone to chop it off. Like, it's really risky. I'm looking at it going,
an interesting analogy.
Well, I just wouldn't put my sack in that position, mate. I wouldn't do it.
Yeah.
It could be good. It could be fun. But I'm looking at this going, sure, from this position at 20K, we could lose another 30%.
Yeah.
Right? We could go down to 13K. For sure. But even if it does that, Bitcoin at 20K and all the other assets, what would you say Ethereum was like?
1155.
Those things there, sure, it could. We're not going to know the exact bottom, but I think that's a less risky option.
Yeah.
I think this is the least risky time in the sense that, yeah, it could drop another 30%, but holy fuck, like at 20K, if you really did think the thing was going to 100K in January and you bought it at 60K, then what the fuck? Right now it's a great time. I think this is the least risk because it's plummeted so much.
What I would say is that it's all related to your time preference.
Right.
Because if you have a time preference like we do, and I personally, the way I look at it, I've got an investing bag and I've got a trading bag. So I might do some trading with part of my funds, and then I've got like coins that I just stack up and maybe stake them and whatever. So when you're building a portfolio and you're thinking about how to do it, you should be thinking about what is your preferences? What are you optimizing for? What are you trying to do? So
what's your risk appetite?
Exactly. So if you're thinking about, hey, I might need to buy a house soon or something like that, and I may need this money in the next 6 months, maybe now isn't a time to get into the markets, because I cannot say with a high level of confidence that this will be over in a 6 months time frame. It could even be worse in 6 months. But if you have money that you're ready to go, hey, 5 years, 3 to 5 years, I think it's a good time. Now's a good time to get in. Historically, this is the time when Bitcoin, Ethereum greed is this low, when there's close to max pain, we're close to the previous all-time high is another good estimator, where the previous all-time high of the previous bull run is a good point for where the lows of the next bear market are, roughly around there. I think that was $19,000. So pretty close to that point, maybe 20,000, around there. So historically good time to buy. I've got a long-term vision of this, and I'm prepared to take that risk. That would be my message.
Okay. So with that in mind, mate, looking to the future, what do you see the most likely scenario playing out? What's the time frame of things? How are you looking at the next 3 months to 3 years?
So what I'm doing, that's all I can speak to, is...
Which is not financial advice.
No, of course not.
Because I drove you home last night and I wouldn't listen to many things. You're in all sorts, mate. So don't take what we're saying seriously.
Thanks for that. That little intro. Yeah, I say some smart things sometimes, and
I say some horrendously dumb things many times. That's why we're the Degen Den.
Because we are DJs.
Yes.
So to answer your question about what I'm doing is I follow this market quite a bit, and I spend a lot of my time like just keeping a finger on the pulse of what's going on, so I can be really responsive when things happen. One of the charts to look at is the Bitcoin dominance, which means it's a chart that represents how much money in the crypto market is in Bitcoin versus other altcoins. So in bear markets like we're in, the Bitcoin dominance goes up, and we've already seen that.
Mm-hmm.
It's sitting close to 50% now. Around 50% of all the money in the crypto markets is in Bitcoin.
Wow.
It was like at 40%, roughly around there. So that's poised to go up, because even what typically happens, and we look back at what's happened in the past in these situations where the money will flock to Bitcoin when it's scary like it is now, and that's what we've seen. People pulling their money out of altcoins, pushing them into Bitcoin because it's a safer asset, right? It's less risky, and you're still exposed to the crypto market. So you're still exposed to that market whilst doing it in the least risky way possible, based on a few different metrics. But Bitcoin's the safe one. But Bitcoin's also, once we get a bounce, typically we see Bitcoin bounce first and lead the market. Bitcoin's going to lead the way out of this, probably. Or it could be a different altcoin. Maybe Ethereum can put its hand up. Maybe even another one can be the one that goes like a Cardano or something that takes the first move, and that just gives Bitcoin a bit of a nudge. But essentially, you want to be in Bitcoin when the market's going up too. Now, we were speaking about this last night. What I'm going to do is, when Bitcoin has its big move and gets the pump, my plan then is to just watch the market, and the market will tell you, if you're just looking at the markets, which coin's about to go. Like, could be of heaps of different reasons as to why a coin decides to move. An announcement, an event like the triple halvening for ETH, or the move to proof of stake, like whatever. It can be a number of different reasons. The market will tell you, and you just listen to the market and you go, this coin's about to go. And then what I'm going to do is move some of the profits from Bitcoin into that coin, or, part of the profits anyway. So if you're not going to follow it that intensely, which I don't recommend you do, it takes a bit of time, effort, and energy to keep up to date with it all. Probably the scenario that I would be thinking about would be putting money close to these lows. Like we said, we may not be there yet, and we could get a bit more pain, but putting money into these quality projects that are on a massive discount, 80%, 75, 80, 90%. Like, it's good to take another look at those projects to just get an idea of, like, hey, are these projects most likely going to survive this? Because some won't. So have another look, have a check. But if you're still happy with what the project is doing, could be the time to consider getting in.
Yes, and the way that we would do that is we're talking about DCAing. What does DCA stand for?
Dollar cost average.
Fantastic. And DCA, we were chatting about this earlier, just a general way of doing it is, say, look at your monthly income and go, let's just pick a random number and say you make $4,000 in the month.
Right.
Average.
$1,000 a week. Yep, sure.
$4,000 let's just say someone makes $4,000 in a month. And they're like, okay, I'm not that well off. I'm making $4,000, roughly say 10%, $400 out of the month. And every single month over the next 12 months or whatever, you allocate that $400 into, those top couple coins
that you're interested in.
You're interested in, that you've done your homework on, that you like the look of, you like the tokenomics, you like the owners, etc. You like the coin, and that other larger market caps. You don't need to go degenning right now because everything's on a huge discount. So,
of course,
that's probably the easiest way to do it, because the other thing about doing the DCAing is that you don't have to catch the bottom. You don't have to have your finger on the pulse like you are right now. It's going to mitigate some of these ups and downs. And what we were saying is that we're probably not going to see, our thoughts are probably not going to see much of a bounce over the next 12 months. In my view is that
12 months?
Yeah. It's
at least till the end of the year for me. Yeah, I would so much can happen. That, like, as much as I think it's so interesting when you're in it, like, and you're experiencing the emotions of the bear market and like the feelings of all the negative news of all the Twitter stuff. Like, we forget how explosive crypto can be sometimes.
It is
based on different reasons. So we did a video the other week about some possible things that could lead to the re-triggering of the crypto bull market. Check it out. I was pretty happy with the video. I thought we explained it quite well. But there's a few different reasons as to what could lead to a bounce that could happen. Like, for example, the Bitcoin halving coming in 2024. Like, I know that's a couple of years away, but that's a massive catalyst. The ETH merge 2.0, that's possibly a massive catalyst.
Which is end of the year?
Roughly. They haven't given a date, but yeah, possibly this year, towards the end of the year. Bitcoin spot ETF entering the market for America, and that just giving so much more potential liquidity into the asset. Regulation coming, like we said, could be bad for a bit, but eventually good. Like, I wouldn't count crypto out from just like even just the move to people. Like, we're talking about people losing trust in the banks and the dollar. Like, similar to how people started to get freaked out with Celsius when they started seeing some of these things. Like, maybe that could happen for the dollar. Like, maybe there will be more people who are just going like, look, we're looking at what's happened in Russia with the understanding that your money isn't your money.
Yes.
Like, if they have, not to sound like a conspiracy theorist, but it was just proven that if you do the wrong thing in a certain way, you are at risk of losing your money.
Yeah, and with the Canadian trucker thing, everything like that. Sure. And I totally agree with that. What I'm seeing right now is a huge correlation between the crypto markets and NASDAQ and regular stocks, in particular tech stocks. And I don't think you're going to see a decoupling for a couple of years. I think it's going to run fairly side by side to the macro stock market environment. And because of that, because we're still somewhat early and there isn't a huge amount of money in it, so we're really looking at some of those big obviously whales and industrial institutional money to see the movement on that. I think it's going to very much go alongside the macro stock market environment.
Yeah.
And in that, I can only see a recession coming next year. There has to be some sort of there's recessionary forces.
There's a saying about recessions though, where it's once you realize you're in a recession, it's close to already being over. So what I'm saying is we could be like, this is the path that we're going down is where we're getting very close to a recession now. Arguably, we're already...
and I hear what you're saying, but the problems that led to these recessionary forces haven't been solved yet.
It is different.
It's more closer to 1970s-ish economics, where we've got large 40-year high inflation numbers.
Things could get really bad.
I think the other big thing is these supply chain issues and commodity issues. Like, we're not in winter yet. When Europe heads into winter, and there's not supply of energy and coal and gas and fuel, that's going to be a problem.
It's cold over there.
Food shortages, that's going to be a problem. So I think there's a lot of really large macro things that we keep saying that, we keep talking about it. And then on the other thing, just simply looking at these big levers, how even when we finally smash everything and we get inflation under control. I mean, previously, to move out of these negative economic environments, we either do quantitative easing and printing a whole lot of money, or we lower interest rates. And both those levers have been smashed to the bottom and you can't pull them anymore.
Yeah.
So I'm really curious about what they're going to do to sort of get the economy back on track, because the old tactics, we've used them. So I'm looking at it going, I can't see any other way from a huge, like a prolonged amount of pain. That's the only way we get out of this, is a prolonged or somewhat of a prolonged recession, because we really haven't serviced the debt.
Yeah.
especially the debt from the GFC and stuff like that, it's just bounced back straight away and prices.
So do you think now's the time? This is when we're going to service it?
What I think is, if you actually had a government or the Fed who was genuinely concerned about the long-term vitality of the economy, you would take the pain now.
And I think that concern.
Well, it's difficult because most of the time where people are elected, they're going, well, I've got a term of 3-4 years. If you're just looking, and that's short term, if you're just looking at the next 3 or 4 years, that's why we're somewhat in the position we're in right now, because they're looking at it going, I want to get re-elected. We can't go into recession. Over the last 20 years, they've been shit scared of going into recession. So even after GFC, they just bailed everyone out. They just chucked more debt on it, and they just wiped some numbers out and go, we can't go into recession. That's all fine. Prop up the markets. Even in COVID, let's just print the sixth of all the money that we've ever printed because we can't go into recession. At some point, the chickens have to come home to roost.
Do they?
You can't. Well,
really?
I don't know enough about it, but the way I see it is that you can't just keep propping it up because there's natural market cycles. And that's the way that it works. And you can't just keep cutting it because that's how you get a bigger drop like that. So
you're thinking that we're going to see like a lot more pain?
I'm saying it's freaking necessary.
Right.
I'm saying as a global economy, we need to have a prolonged recession and have some hurt. We've been so damn terrified of economic hurt. And some decline in growth because we're short-term thinking. The long-term benefit to actually have a strong economy is to take some damn hurt.
And the Dixie, the DXY, the US dollar strength index, is retesting its highs from like last month. I think it's like 105, and it's poised to break out to the 110, 115 mark. That's what I'm hearing anyway, which means that like the dollar's strength is going to increase in this next period.
So if I was to really go out on a limb and have an absolute guess, I think we're going to see some sort of a bottom in the next month,
right? And
see some sort of real pain there, and then we're going to see a bit of a bounce. But I think it's going to be false, and I think we're going to see some real hurt next year.
I think it's another fake out coming.
Well, I could
see it happening.
I just think that they're going to try and prop shit up, and some domino is going to fall. Yeah, obviously in the GFC it was a housing market. They were propping everything up like crazy, and then finally someone pulled the last little bit out of the Jenga block out, and it came crashing down. You just need one more big global event to happen like that. And do I think that they're actually going to think long-term, 10 years? No, not at all. As we just spoke about at the start, delayed gratification? No, they're concerned about instantly getting back into office. But I think that's going to cause more problems. So I think next year...
The alignment of incentives.
I think next year is going to be where there's going to be more recessionary forces come through. So I genuinely think that we're not going to see these crypto peaks for about 2 years.
Yeah, I can see that. I think I'd agree with that. I could see, though, that we could rest a little bit higher than where we're at once we deleverage and maybe we sit above 20K for 6 months, 20 to 25 to 30, we range.
Yeah, definitely.
Definitely. So in saying that, whether or not this is going to be the bottom, because like you said, the future looks bleak, it could be a good point to look for a bounce anyway.
Yeah, exactly. So, that's what we're going to do. Strategy is going to start DCAing in soon because, as we said in our previous episode, that you want to buy all the way down and then you want to sell all the way up. Yeah. And so we learned that we're going to be smart right now. Everyone's fearful. Don't be selling now. Be buying now. That's the less risky thing. And then hopefully whenever that is, might be in 6 months, it might be in 2 years' time, we sell the way up.
Another quick strategy, I know we need to go soon, but something that I'm looking at doing that, I know we're big on the metaverse and these play-to-earn games, is like everything's crashed right now in that sector. I got to do the Illuvium land sale. Had some fun with that the other weekend.
Absolutely.
Great time. We picked up 2 lands, 2 tier 2s,
Let's
which
go.
we were pumped about.
Let's go.
So the NFTs for these games that are already out that have promised future utility, if you trust these game developers, and there's some good ones that are out there now, that you could, like, it's a bit of a high risk play, but some of these NFTs are like on fire sales right now. Some of the Star Atlas ships that were like at 1,500, like starting, are like down to like 600. Some that are like at 900, they're down to like 150, like fire sales. And if you are thinking about potentially engaging in these games long term, Miranda's exemplars are like under $100 USD for some of the human ones. And they've got, Miranda says, an upcoming playtest where you're going to earn Materium, the in-game currency, based on how many exemplars you have. But anyway, that's just another example of how you can diversify, but a different strategy for you're investing in the crypto world.
There you go. So that's some of the reasons that we're a bit bullish. Obviously, people know our views on the metaverse, and just very quickly, I think the other reason that we have faith in the area is the eventual tokenization or the digitalization of almost everything.
Yeah,
I think that's paramount. That when we see the alignment between asset holders and customers, really come to fruition, I think we're going to see some pretty exciting things happen in the space.
Great.
Why would someone just be a customer and not be an asset holder? Or why would someone be an asset holder and not also be a customer?
Our relationship to brands is going to change.
Exactly.
To brands and personalities.
Exactly. And so what's going to be great in the bear market is we're going to see true productivity grow with proper good projects being built right now.
Definitely.
So we'll be looking.
Now's the time to look. And we're going to be doing deep dives. I'm keen to do a Miranda's deep dive sometime
Miranda's
soon.
deep dive.
Star Atlas deep dive.
I can see a Polygon deep dive
for sure
in the future, and looking into some of these quality projects.
And if you've got any suggestions, if you want us to cover something, hit us up in the comments. Let us know.
Yeah,
we're keen. We're keen to talk about whatever.
Absolutely. If you want to see Doss's new haircut, let us know.
Yeah. Thanks, mate.
That's it. Well, thanks for joining us, everyone, on the Degen Den.
Remember to hit that like button.
Smash it.
Smash it.
Destroy it. Like and subscribe. See you next time, fam.
See you guys.